estate agent, brokered by eXp Realty, and owner of the Empire Realty Group.
And we are Sisters in Real Estate.
Hey, everybody.
Hey.
Back with another episode. Back like we never left before.
What? Wait a minute. Can we start over again? Because I don't know what just...
I kind of took in my Nikki. My Nikki. You know how, you're a rapper by night.
Alter?
Is loan officer by day, rapper by night.
Make sure you keep the day job, babe. Okay?
Oh my goodness. Welcome you guys to another episode of Sisters in Real Estate. I am LaShonda, the realtor.
And I am Nikita Jacobs, your home and loan girl, and we are the Sisters in Real Estate. Listen, I'm so excited about our episode. It's been a minute, so don't do nothing to us. We've been busy and lifing. Okay, let's keep it real real estate.
We say that real estate market heats up during these months. They're like, it's on fire. Like
they on fire, okay?
I'll be sitting at home like just chilling. All of a sudden, just go bam, 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 bam. I'm like, I gotta catch my breath. It can just rapid fire, just real quick, real. But I love it. I love everything about it. As you guys can see, we do have a special guest, Miss Kayla Stutson.
Yes,
she is our financial planning person. She's with Thrive Consulting and Financial Planning. We'll give her the opportunity to introduce herself. But before we get into all that good stuff, of course, we're going to give a little market update. We got a few more gems we want to drop. And then we just kind of want to have a just overall discussion over just some general things that are going on in the world and, see what we can do to better educate ourselves and, incorporate our life insurance policy so that we're all good to go. So, you want me to do the market updates? You gonna do the market updates? How you want to do it?
I mean, I'm okay with doing the market updates. I mean, the market update is the market is heating up, okay? And now is the time to buy, as we say all the time. You guys that are waiting on the fence, hoping and wishing upon a star, people are actually making moves and they're buying. Like this is the summer months, and the summer months usually are the busiest because that's when people are kind of out. The weather is beautiful and they're ready to buy a house, find something new. And so what that means when the market is heating up, that means there's going to be a little competition out there. And so that means that you're going to have to bring your A game when submitting offers. And so Shonda would be a perfect person to really kind of segment into that when submitting offers and making sure you're ready, for your home buying process. So
absolutely. So the most important thing that I'm seeing right now, because it is heating up, is to just have all of your ducks in a row. I can't emphasize that any more than that. Like right now, it's getting to the point to where it's almost going to kind of look like what it was in 2022, when the houses were just flying off the market and sellers were just getting over asking. They may even start, to want to see proof of funds. Your pre-approval letter. They may want to see a full approval letter, or, if you're paying cash, they may want to see, your statements, your letter from your bank or something to that effect, just to ensure that you're a serious, buyer and that you qualify. Because I'm hearing now, buyers are falling out because of their financing. It's not strong enough. So sellers aren't going to put up with that, being that the inventory is low right now. They want serious buyers. They don't want people just oohing and ahhing about their house and, not really ready. So have your ducks in a row.
Yeah, get pre-approved. Honestly, to be honest, I have people asking me where to start. The main thing to start is knowing where your budget is. Get started with knowing where your credit is. Get comfortable with knowing some things that you don't really want to know. Some people they just don't want to know. You know what I mean? Or they just scared to know. Mm-hmm. And so it's important that if you're scared to know, like check my FICO. That's a great tool to use to know where you stand as far as your mortgage credit score. Know what your budget is, what your monthly expenses is on your credit report, and what your income is. So that way you can kind of know the payment that you truly can afford. Just don't be throwing out numbers like, oh, I want a $1,500 payment.
Right.
Honestly, that's almost a thing of the past, y'all. So I hate to say that, but it's kind of, I mean, that's like the number everybody throws out every time you ask them kind of what's your desired payment? Oh, 1,500. I guess I shouldn't say desired payment, right? That might be where I'm going wrong.
Yeah, like they like I don't want to pay no more than $1,800 a month, and I'm like, if you're buying, I'm like, then that means you don't want to spend no more than $200,000, which means you're going to be looking at a fixer upper in an undesirable neighborhood, and you're going to have to do some work to it.
And that's just keeping it real, right? If you're going to come to that, here's another thing. Okay, and I'm going on topic but off topic, and that's one of the things I love about it. If you're going to trust the person that you have hired to help you along your journey, like your realtor, and you're working with a loan officer, it's important to take their advice, take their expertise. They've been in the market long enough to know what is happening, and they're just only educating you. People get put off when you tell them the truth. You know what I mean? Yeah. It's kind of like, oh, because they didn't know. I guess they maybe don't believe it until they go find somebody else to tell them the same. And it's kind of like, okay, well, I'm glad that you wanted, and it's okay to get a second opinion. We all kind of need to do that sometimes, but it's important to understand the market we're in is not that market that it was back in 2008. Okay. Back in 2009, it's different. And so interest rates are a little bit higher. However, there are ways to maneuver the interest rate. So don't be afraid by the interest rate. Know what your budget is, know how much payment you can afford, and go off of that. I think I said it before in one of our past episodes. When I first bought my house, I literally didn't know anything about interest rates.
Yeah.
All I wanted to know was what the payment was. Okay.
Right. At the end of the day, what am I paying?
Okay.
What am I paying? And it is not just to the buyers either. The sellers, although it's it's a hot market and inventory is low, buyers are still on the fence about buying. So make sure that you too are trusting your realtor on what you should list at, how you should list it, what incentives if any you can offer to make your home attractive in this low inventory market. Just because it's low doesn't mean you're gonna have people are just gonna run to your house. So overpricing your house or pricing it where you think you should price it is just gonna hurt you, because you're either going to have to sit on the market longer than you want, or you're gonna have to lower the price. And then how much do you lower the price? You shouldn't have to lower the price of your house if it's priced right. But it can happen. Even if it's priced right, it can happen. You can still have to lower the price. So it's just the trick of the trade. It's just part of the process, because buyers are just on the fence. These interest rates are already up there. People are just like, that's a high interest rate, but I mean, it's really not terrible. People just think that they got to taste it at 2 and 3%. They're like, I want that again. It's not coming back.
Yeah.
Lucky you, Kayla. Lucky you.
You know what? You bring something else too, Shonda. Overpricing it doesn't mean that whenever, especially if it's not a cash buyer, if it's somebody who needs financing, we got to get an appraisal done. And if it does not appraise for what that amount was, it does not matter, because you're going to have to go back and renegotiate that anyway, to hopefully probably down to what the appraised value is. Unless, the buyer has this capital or whatever that they can cover it if they're willing to do that. But right now in this market, I don't see a lot of hey, I'm going to give you all this money now if it's over the, appraised value. So I would definitely say, listen to your realtor when it comes to pricing. They run comps in the area. They understand the market. They also, just because, one house sold for this last month don't mean your house is, because it might not be in the same condition as that house. It may not be the most desirable one. And you just got to keep it real at the end of the day. You know what I mean? So,
and another hard pill to swallow too is, just because you spent $100,000 on upgrades in your house does not mean your house is going to appraise for $100,000 more than the house next door that has the same floor plan, the same square footage, and the same upgrades. It's just you got stone instead of ceramic or whatever. That's not how it works. You don't get dollar for dollar. The appraised The
That's
appraisal is what's going to determine if it's valued at that. And they don't give value on everything. Like, oh, I got a pool. Okay, they got a pool too. Oh, I got a fireplace and it's wood burning. They got a fireplace too, and this one's electric or gas. And like, no, it's just they think it's so cut and dry, and it's not. It's not black and white. It's not. So just keep that in mind before you start putting all this extra upgrades and trinkets and all of that in your house, because just because you put that in there doesn't mean that's what you're gonna get back.
Yeah, I mean, it might make it more desirable for people to want to come and look at your house, but the price is what's going to say whether or not they want to buy the house. Okay.
That's right. But without further ado, like we can go on and on and on and on and on, and Kayla can still keep sitting here like, yep. But let's get right to it. Kayla, do you want to tell us about you and let us know what we need to know about life insurance?
Yeah. Well, first, thank you for having me. I was really looking forward to today. I just love when women come together and we work together as a team. Like that's my whole platform when it comes to my agency. So I'm Kayla Stutson. I am the founder CEO of Thrive Consulting and Financial Planning, where we are wealth specialists, and I show other, especially moms, how to do it. Wash, rinse, repeat, right? So we work dominantly with African-American women. We work with everybody. Like our biggest market is that because just within our culture, we know life insurance is, okay, I'm dead, now I get this money, when that's not the case. Life insurance is for the living. So if you sit down and talk to the right agent and you let them know what your goals are, like Nikita can tell you, when she first came and talked to me, I was like, well, what's your goal? Like, what is it that you want? Because I'm a broker. So if you're looking for a final expense policy, I'm going to ask you why. I'm not just going to give it to you. Because just like with you guys, if I come to you and I say, well, I want this house, you're going to go, okay, we got to ask some questions. We got to figure out why.
How much money you got?
Like, what's your mindset? What you thinking about? So if you come to me and you're asking for a final expense policy because you're like, well, I just want to make sure my family can bury me. Well, why not have your family bury you and make some money at the same time? People just don't know. So my agency is comprised of 6 women, 1 male. We are all African Americans. All the women that are set up underneath me are all moms. Some of us do it full time, some of us do it part time. My biggest component within my agency is my child capital program, which is kind of what me and Nikita talked about a little while ago. It's basically a strategy that's been put together that provides the life insurance need, medical financing needs, college funding needs, and retirement in one strategy. So we're able to fund one with the other, basically is what we do. And then from there, people are always so worried, well, I have this policy on my child and now I'm ready to turn it over to them. What happens if something happens and they lose the policy? Well, if I write it, there's really no way to lose that policy. But if you, what we do is we take it and we show them a different product that once funded one time, there's no way to lose it. And I think the minimum payout that I've seen on that was like 2.3 mil.
The minimum?
That was an mil.
Where do I sign up?
Okay, so visit.
When you said that though, I cracked up when I saw.
Oh my God.
Visit www.thrivecfpconsultingfinancialplanning.com. You can see in there, we do everything. We can do mortgage protection. We can do debt elimination. We can do final expenses. We can do variable policies. We can do build your own banks. I have a client that we set her up in a strategy. She just purchased her house. It's a 30-year loan, right? Starting in July, we're going to start this process. She's going to have every penny. And when I say every penny of her debt paid off in 10 years, 3 months. We're saving her $54,000 in interest. Not only that, we're building her retirement at the same time. So once everything is paid off and she's ready to retire at 65, she's going to have $2.3 million in liquid asset for retirement.
I'm going to throw this pen at you.
Like seriously, and this is one of the reasons why it's important to hear these things. I think that people need to be Like we need to shout it from the mountaintop, you know what I mean? Because
but like the people are so skeptical. That's the part that is frustrating, I guess, because everybody thinks everybody's out to get them. Now, y'all, I am naive. I am real naive. My husband gets them to me all the time. Like, if you tell me something, I'm going to take it. Like, because why would you lie to me? So as I'm talking to my clients, like I'm very real with them. And like, even with my girls, as my agents join my team, I'm like, look, I'm going to be 100% with you because I'm 100%. I am transparent as cellophane paper, y'all. Professional when I need to be, but I can be down to earth when I need to be. If you got crack pipe dreams, then you're gonna need crackhead mentality. Okay. Like if you want this, if you really want this, you can't just sit on the sidelines and expect people to just be like, oh yeah, I need life insurance, because people are already skeptical of it anyway. Either A, because they did not understand it when they were given to it, or B, like with me, my first policy, my uncle had passed. He had a heart attack that caused an aneurysm, and he was on a roof, and it basically took him before he slid off the roof. He was late 30s.
Wow.
So our whole family freaked out and got life insurance. We didn't know what we needed. We just know we needed something because nobody had anything. So I'm 27 years old. This agent talks me into a term policy that was like $150 for the year. And I was like, yeah, we can do that. Had I known for like an extra $20, $30 a month, I could have had a whole life policy and not be checking every year, like how many years I got left? How many years I got left? Because when I go to convert it, like when I went to convert it the very last time, it was a couple of years back, instead of my $150 a year, it was going to be like $150 a month. Y'all crazy. I ain't doing it.
Wow. Well, and see, I'll be honest with me, it's my lack of understanding. Because whenever I have had policies, but me not understanding it fully and just like understanding surface level of it, it didn't resonate with me enough for me to be like, oh my God, I gotta make sure I keep this. Like, this is how powerful this is. Like, because I think I had a whole life.
That's the problem.
Something else, I was just like, yeah, it wasn't a priority for me. But it's mainly because I don't understand it. And it's like, okay, do I set it and forget it? Or do I set it, manage it, and let it evolve? Like, what do I do with it? Once I get it, do I just make the payment and then 50 years from now I'm ready to cash out? Like, what? I don't understand.
What happens? So, I mean, I'll say this, like, if you ever go into somebody and you say, I need a policy, and they just write you a policy, that's an issue. It should never be like that. If you go in and say, well, I want $100,000 policy, why? What is it? Did they give you a financial analysis? No. Well, then how do you know how much coverage I need? Or if you do my financial analysis and we figure out how much coverage I need, but right now my funds are not going to equate that. When me and my husband first got married, he had a friend that came over. Mind you, I am 25, working full-time at a daycare. My husband was a teller at Bank of America. Bank of the West at the time. And this dude came up to us and told us that Marcus needs a $500,000 policy. I needed a $300,000 policy so that we can fund for Zay's college and and it was going to be like $400 a month. I was like, well, baby, where is this $400 coming from?
Right, that part.
Like, I just told you I make $12 an hour. Like. And the way that he made me feel, that agent made me feel, because what he didn't know, I was going into insurance at the time, and I was like, nah, baby, it don't work like that. But I made a promise when I started my agency, I would never make a client feel that way, because the need is the need, and that's understandable. But I'm not going to turn you away or make you feel some kind of way because you can't afford what the need is. Like, the need is not doing a GoFundMe. That's the need.
That part.
The perk is the cash value add up. The perk is being able to leave something to your children. Right. But the need is, I don't want to have to mourn and scrape and hustle and get these funds at the same time. I just want it done. I just did a career day, and one of the kids was like, well, I don't want to be sad and poor. I was like, okay, Exactly.
You on the right? We on the right path.
If they thinking like that, that's what I'm talking about right there.
Right. So as you sit down and you do your financial needs analysis, like we're really big on strategies. Like if I can't get you, like let's say you don't have this $10,000 for this annuity, we can make it do what it do for $100 a month.
Right.
Like so I told myself I will never make my client feel inadequate because of the financial situation that they're in today, because that probably won't be their financial situation tomorrow. I've had so many perspectives that's come to me and they're like, I ain't heard from my agent since they wrote my policy 5 years ago. That's an issue. Have you divorced? Is your ex still your beneficiary? Because that's what's gonna get that money. Yeah. Unless you change it, ain't no going back. Have you had grandchildren? Do you have children now? Do you were at $100 a month. Do you want to bump it to $150 a month? Like these are conversations that need to be had, just like you do with your homeowner's insurance. Right. You should be getting a call from your agent every year to make sure that everything is how it's supposed to be, or at least the thank you.
Yeah. So is there like an age limit, or like for somebody that's 50 or 60, are you saying to them like, okay, this is what you need to be doing? Or is it just a conversation of what do you need? Because
it's still a conversation of what's the end goal. So when you sit down and you have an appointment with me, we literally have a section of it is called what's most important to you. And we ask a bunch of different questions. So from those questions, we're taking notes. Mm-hmm. And so I was like, okay, I am hearing you say retirement. I'm hearing you say income replacement. I'm hearing you say debt elimination. Okay, I can put you in a DFA and that'll take care of all of that. I'm not going to sell you a whole bunch of different policies if I can, do it with one. Mm-hmm. Well, if you're like, I don't have any family really, like I don't have any assets, I'm older, everything's paid off, you really just need a burial policy. And I'm not going to sell you something extra that you don't need, because at that point, just like you said, I'm not going to keep it because I don't understand why I got it. Mm-hmm. I just had an appointment on a Monday and they're like, well, I want all of this and all of this. And I'm like, okay, but you're in the military. So they're going to cover up to $10,000 of any of your burial expenses. You're telling me that you want to be cremated. You don't need all this extra.
Right.
And then if you're in this house and you know that this is not your long-term house and you know that you don't want to keep this long, or I think they're going through a divorce right now, so they don't know who's going to get the house. I'm not going to put you in a DFA because the goal is to pay the house off. But if you're not going to pay the house off, then what's the point of doing that? I could just do a term policy as mortgage protection in the meantime to just be able to pay the house off if something happens to you before your children are grown and gone. But if your children are grown and gone, are they really going to, not to say are they going to want to keep the house, but who are you keeping this environment in place for? I want to be able to give you the option of either A, yeah, we can pay this house off, be done, and it just stays in the family and we choose to do what we want to do with it. Or B, well, here's some extra funds, and if you want to sell the house, then sell the house too. If there's nobody there to keep the house up, or if you don't have anybody there to do the management of the property. That's why it's important to ask these questions.
So what about the policies where people are using to build generational wealth, as far as using it to purchase real estate or something like that?
Those are indexed universal life policies. Any policy that is not a term policy is going to build cash value. Okay. How it builds that cash value is dependent on how you fund it and how it's written. Okay. So majority, I think there's a video clip of it's like Waka Flocka Flame. He was like, I'm never going to put my money in the bank again. I'm always going to buy it and buy more life insurance, which what he's saying is absolutely true. But when you come in and you're like, well, I only want to do $50 a month, you ain't going to get that unless you
right.
Who?
Right.
Titus is going to get his because I wrote his when he was 2. Titus got his. He's going to be able to purchase a house. He'll be able to do business down payment. He'll be able to do college if need be. We have some clients that are using their IUL policy as funds for college. They started it at 3. For 4 years, they're going to be able to pull out $25,000 consecutively without depleting the policy.
I need to sign up. I need to
sign up. Just call it www.
Listen, and you know what?
That's your appointment.
That's what the key is because even on the real estate side, when they're buying homes, people are skeptical too because they're afraid of the affordability. the money that they got to spend. The market itself is so, and I'll say this because people say it, but it's saturated in a sense, right? Everybody is being the expert. Everybody is saying all these things, and the internet is full of people on top of that. And so people have a trust issue, right? Because there's so many people. How do I even select or pick or know who's actually telling the truth?
Yeah.
So I think that that's why I have that compassion, because I understand why people are on the fence. But it's also like, you don't know unless you try. You got to take a risk somewhere.
Yeah.
And it's like risk, finding more information, doing your research, and finding the right person, the expert to connect with, because that way they can explain it to you. And even if it doesn't, here's the thing, and this is for the audience. You might not win them all. That's why it's called taking a risk. But if you sit down and not do nothing, you will never know. Like they say, if you do the same thing you did last year and expecting different results this year, it's not going to happen. I'm taking losses, okay? Starting my own business, doing the things that I'm doing, I had to take a lot of losses to get to a place on where I want to be long term. You know what I mean? And so sometimes we have to understand, as our people, right? They have to understand that safety is not always the way. You know what I mean? Like, in the sense of, you have to, if you want to see your kids become the greatest, if you want to be able to do the things that you always wanted to do, it may take some sort risk, right, to get there. And so life insurance, to me, people, I think one of the big things about life insurance is people like, but how we have all these insurance, like you might have to get, when you go rent a car, they want you to get the insurance, when you rent a car, and nothing happens. So that now that money is just gone. So they feel like it's a waste of money, but it's not. You know what I mean?
Because you get access to this money. It's your money.
In your instance, you get access to this while you're living. And I think that makes a whole different ballgame. And getting with someone like Kayla, who understands and have compassion for people, not just a transaction. That's what I try to tell my clients all the time. Listen, if you're looking for a transactional type of loan officer, I'm a relational loan officer. I build relationships. You're not just a transaction to me. Literally, I'm invested into you at this point. You and your family, whatever your dream is, the reason that you want this, I want it just as bad as you at this point. And so, you know how you be like, but I can't want it as bad, I can't want it more than you.
More than you, yeah.
And so, and so that's where I think that is the Kayla, you said so much in that time frame that you really kind of spoke, like, seriously, just about the life insurance and being afraid to do it and people not really knowing, and the way that you can build it right now, the way that your kids are going to be set up once they are, of age. Honey, that's what we living for. We're trying to get out of the situations that we've been put in our lives for our kids, the generation after that, it's kind of like Beyonce when she was like, my kids gonna be billionaires. I was like, get it, girl. Okay, like, that's what I'm talking about.
The crazy part is, like, what I'm talking about has been around for years.
Yeah.
Years.
Yeah. It just wasn't talked about a lot in our community.
Yeah.
Well, I think I was telling Nikita that, like, when I was going through and I was telling her about my child capital program, my youngest is Titus. He was 2. He's 3 now, going on 65, y'all, I swear. But he's going to more or less likely, like, he's going to make more in retirement off of my child capital program than he is while he's working. Like, at 65, his first payout is like $234,000 annually. And it's going to go up every year. That's not including his life insurance. Amazing. Like, that's not that. Like, once everything is said and done between his life insurance and his annuity, like, depending on how his spouse chooses to do this, because his spouse could get that, $200-300.
Oh, baby, marry the right one, Titus. Come on, man, marry the right one.
But the life insurance policy is going to max out at about $1.5 million.
Wow. So this means that, we need to start telling our son, I don't have a son, I have girls, but we need to start telling our sons, like, don't share no information about your insurance policy. We need to tell our daughters, you need to find out if this boy got an insurance policy before you marry him.
Yeah, and that's the crazy part. And, like, and that's just it. But here's the thing too, though, like, we tell our clients, because the amount of money that's going to be paid out on this is like well beyond what you're going to need for a burial setup.
Right.
You have to
get
a will and a trust.
Yeah, absolutely.
Allow the trust. And a lot of people mess up, especially like a lot of my single moms, like when I talk to them, a lot of them mess up and put their children as the beneficiary. Do not do that. It will be lost in probate. They don't have a bank account. They're not old enough to take on these funds. There's nowhere to put it. It's going to be lost in probate. So when it comes to insurance, you get a primary beneficiary and then you get a contingent. So on my policy, my primary obviously is my husband, because he's going to need to be the one to get the money, pay the funds, do the things, right? My contingent for now is my parents. So if me and Marcus are together and something happens to both of us, that money is split between my parents. My parents are going to have to figure it out and work together to get this paid off. But once we get our trust put together, my parents will no longer be on there. I will have my account set up with the funeral home already, so I know the expense. So my trust will say, when she dies, this much money goes to X, Y, and Z funeral home. This much money is paid out to Xavier on his 18th birthday for the next so many years, because Titus and Xavier do not have to wait for me to die for a come up, because I already set them up.
Yeah, that's really good.
And especially on theirs, the way that I have their life insurance set up, they'll never pay another penny into that after 65. And the other half of the strategy will start paying them out at 65.
That's really good.
And they're covered till 120.
On Nikita, on your end, that's verifiable income, right? So if somebody wanted to pull that out as a down payment, on a house, they could use that, right?
As long as it can be sourced, that it should be fine. Yep. If it's been sourced and we can verify the funds on where it came from, you can use it. And as long as they allow it for that reason, right?
Yeah. So like when you pull money from your life insurance policies, that's your money.
Yeah. Even if
like it might have rules to it. You know what I mean? Like
some of them do, but more so when you're trying to like roll money from one place to another, because like what a lot of people don't know is like you can take your life insurance money and roll it into an annuity.
After I spoke to you, Kayla, you motivated me. I was like, because I told you I have insurance, right? I have life insurance on my husband, me, and my kids.
I told you to go back and ask all the questions.
From when they were born, you know what I mean? Like I immediately put life insurance on them immediately. Like me and my husband, we both have it. And so I was like, okay, I put my little spreadsheet together. I was like, okay, let me see. Cause when I go to Kayla, honey, I want her to know what I have. I do me and my husband have term. We do have term. And his is a select 20, mine is a select 30. The kids are a UIL, but they probably, kind of get, they don't. So one of the things I had called my insurance company because it's with.
Good job.
I did.
It's a good job. I know I sent you back with some homework.
Yeah. I called my insurance company. I think it was State Farm that I said I was with. I can't remember. State Farm, I think it is. Anyway, and so I talked to the lady. I said, do the kids have a UIL? I'm asking these questions now, right? And this is why it's important to educate, because okay, I could take somebody in. I had no clue about any of this. Okay, it was just more so I didn't want my kids to be struggling or my husband to be struggling when we pass away to kind of pay for their burial, But at the same time, I also want them to have a little extra just so it can kind of help soothe a couple of things that they might need to have done, But the kids, and I still have it on my oldest son too, So that's where I was kind of like, okay. They were saying that he has a little bit of cash value, but they don't recommend taking it out to do anything at all. And they don't recommend what they saying, like, I think if there's a way for it to end up paying it for itself or something, that they didn't do a good job with explaining it to me, right? So I was like, okay, and I think she didn't really know, she couldn't tell me a lot of the stuff, right? And so, and when I talked to you from when I talked to her, I was like, okay, I'm completely lost.
Right. The math ain't math, and child, the math. Now, this is what I will say. Yeah. Depending on how you're choosing to fund the policies on these IUL policies, like I said, like if you're starting it younger and it's like $30 a month, that 30 is going to give you a whole lot more at 2 than what it's going to give you at 32, right? So depending on how much cash is in there, Whenever you take the cash value out of the life insurance policy, the death amount drops by that much money.
Mm-hmm.
The kicker is knowing when to take the money.
Right. Okay.
How much of it you want to take and why are you taking it? Because you if you want to pay it back in, you can pay it back in, but you don't have to. So what she has more than likely been learned or trained or whatever is, no, don't take the money out because it's going to drop your death amount. But if the initial death amount is more than enough for the burial, then why does it matter? Right? It just, and some people, like, depending on how much you want to take, if it exceeds the surrender value, then it gets weird like that. But you never want to take all of it out because that doesn't make any sense. If you take it all out, then where's the money? Where's the cash? Because even though you're taking money out of it, you're still funding the policy. So it's still growing on that indexing credit. So that's how that works. Some people say don't borrow against it, but if you're funding it with the mindset of I can borrow against this. This is why I like to do the illustrations. So when you set your appointment, LaShonda, when you we do it just like this. I'm on a Zoom. I don't like when people take my information, they disappear with it, and they come back with all these numbers. Like you went from A to Z real quick. Like I'm trying to, can you take me with you? So all of our appointments are via Zoom, just like this. I share my screen and we do the illustration in real time. Okay. And I can show you like, okay, at this age, you'll have this much in cash value. Your death amount is going to be this much. If you want to borrow against it, it'll be this and this, but it'll continue to grow because you're continuing to fund it. Now, what she's talking about, like how the cash can pay the policy, that is if you choose to no longer make payments on it and it's not structured like this, you're just paying it normal and it's not structured to do this. If you miss a payment, then they can just take it out of the cash value. But if you structure a policy where it's technically overfunding, but based off of the dollar amount that you told me, like you can, if you come to me and you say, Kayla, I can do $50 a month for my kid. Cool. Let's do $50 a month. We're going to run the illustration to show where it stops at age 65. And we're going to see where this lands us. So if I stop it at 65, you'll see it on the illustration where there are zeros down that screen from there moving forward. But the cash never drops because of the way that we chose to fund it up to the and the policy will carry out to at least 100, 120. However you choose to do it is completely up to you.
So my next question is, so because you like my mom's mom, so my uncle recently passed, and there was no insurance. But after the funeral and everything, you know, we were sitting around talking, and there was a conversation about mama did have an insurance policy on all of us. We all had insurance policies. But nobody knows what the documents are. Nobody knows who to call. And I'm like, how does somebody find that out from my grandparents? How do they find out where? So that money is just sitting in limbo somewhere. Y'all done did a whole GoFundMe and people paying out of their pocket when y'all got a whole insurance policy, but because there was no paper trail, you know, left behind.
There is no like database for this because every company has their own life insurance, right? So I have I can write with over 200 different companies, right? But there is no like one database that carries all the company's information. So again, when you come and work through Thrive, we have a form that you complete. It's called a critical action networking plan. It gives me and the people, I ask for at least 5 if you can give me more full, but it's a form that I have and it has who that person is, who they are to you. You're giving me permission to contact this person to let them know, hey, I'm the insurance agent. You got my number. I got your number. If anything happens and you can't find it, you need to call me. I send all of my clients as soon as your policy is approved and I get the electronic documentation, you get a welcome email from me with the electronic documentation sent to your email. And then once I actually get the policy in the mail, then I mail that out to you as well. Within the packet, the folder that it comes in has all of my contact information, all the carrier's contact information. You know, I'm constantly texting and emailing throughout the year as well. There is no reason for you to not know who I am unless you are purposely, you know what I mean? Like purposely not trying to figure out who I am. So if I have your number, you have your number, and I notice that like the policy is lapsing, or like, hey, and payment ain't coming through, I can call. If I don't get an answer from you, you've given me permission already to call these people and say, hey, we noticed there's been a couple lapses, haven't been able to get in touch with her. Do you know anything? There are billions of dollars lost in insurance.
Mm-hmm. I believe that.
You know what? Say that again. Not say that, but I'm saying like literally, y'all.
Yeah.
That's why it's important. You know, we don't like to talk about this.
I hate talking about it.
I don't mind talking about it because we got to go one day.
Yeah.
And what I don't want is for me to go one day and y'all have nobody has access to nothing that
I know who it is, or it's set up to an X.
Yeah.
I'm not saying God knows the date. It's not going to make you go sooner because you talk about it. Okay, let's
say that again for people like me.
But you got to change your mindset on it. Like, don't look at it like it's death money. So majority of the policies that we write, I can speak for everybody. I can speak for Thrive. We have what's called accelerated living benefits in ours. So if you have a stroke, heart attack, paralysis, invasive cancers, renal failure, terminal illness, or you lose 2 out of your 6 daily functions, tap into your money.
Yeah.
Pay these bills. That's what it's there for. It's not life insurance, it's for the living. That's why it's called life insurance. It's not for the dead. Because when you're dead, the money gone. You can't do nothing.
Right. That's good to know. And I hate that it's because they didn't have electronics back then, so everything was on paper, everything was written down.
I mean, it still should have been mailed.
That's what. Oh my God.
My son's 11, baby. My son is 11. I said, "Hey, Xavier, go get your life insurance policy." He knows exactly where to go get it and the numbers to call.
Well, you're in the business, though. You know, that's one of the things me and my. You know how we be really talking sometimes, like, you know what I mean? And we be like, but it's because we're in the industry.
Right.
Get away, like, you know, blah, blah, blah. And then people like, but that's because you're actually in it.
And I know he came to me the other day. He's like, Mom, I got how much money I got in my life insurance policy? You ain't touching it until you're 18. So
listen, we ride with our industry. Do you understand what I'm saying?
But no, I mean, it's really important.
You don't believe in it. Yeah.
Like I had that conversation with my mom. Like, I don't carry her policy because what she has in place is sufficient. I'm not about to go in and do nothing extra.
Right.
It doesn't make
that makes sense.
But the conversation, I know what songs she wants at the funeral. I know what the color of the casket and all the rest of that. Because if anything happens, of course, they're gonna be like, "Hey, Kayla." Mm-hmm. And I'm not about to be sitting here arguing with my sister. Like, I ain't doing it. Like, she said XYZ third is right here. She signed it. I'm not about to argue with this, that, and or the other. I don't care what you want. This is it. And it was a hard conversation to have.
Yeah.
I mean, I had to do the same thing with my dad. Like, but you asked as far as like age limits and stuff like that. Not really. I can write as high as 85.
Really?
Typically about 85 when they like, y'all should have figured that out like at least 10 years ago.
60 years ago.
But I'm telling you, it's like there is no wrong policy. Anything is better than nothing. Let's start there. Because like my term policy, I still have it. Like my husband knows to use it for either income replacement or to pay the house off. Yeah. I don't care what you do with it. It's your money. Do what you want.
Yeah.
But you know, as high as 85, you can even set stuff up so that if they go into a nursing home or a funeral home, the life insurance policy will pay it. There's a lot.
So they already know, okay, this is going to Golden Gate. You know, there is no need for us to even if we don't even like Golden Gate, Mama already put it in this writing that it needs to go to Golden Gate.
Yep.
Wow. Well, I really hope y'all got something out of this. This is really helpful, even for me, the one who does not like talking about it, the one who doesn't understand it a lot. So I'm gonna be calling you. So go ahead and give us a rundown of how we can reach you, your socials, all that good stuff. And then if you can put it in the chat, that way we can kind of just read it.
So the quickest way to get to all of it is just through my website, www.thrivecfpcharliefrankpaul.com. So thrivecfp.com. You can see a list of all of our services. You can go in and find my links to all my socials at the bottom of there as well. When you click on the schedule, it'll take you directly to my Calendly, so you guys can go in and book at your leisure, at your convenience on what's available. Like I said, it will be a Zoom. We'll do financial analysis. We'll talk through options. We'll talk through strategies. So that way you feel comfortable with whatever you choose to walk away with.
That's awesome.
I guess put in the chat too. Best phone number, 214-603-4271 is the best way to catch me as well.
Awesome.
Man, so I mean, honestly, when I had a conversation with you, I was like, oh, we got to bring her on a podcast. Like, I want as many people, like I said, we should be screaming this from the rooftop because the people really need to hear it and they need to keep hearing it and they need to get uncomfortable with hearing it. Then they need to get comfortable with hearing it, and so that way they can make moves. You know what I mean? It's like if you keep hearing it, at some point, you just might actually do it. You know what I mean? So
I do something, and I will say, like, time is not of the essence, y'all.
No.
Like I wrote a policy for me at 32, and I went to go rewrite it at 34, and I was like, nah, I'm gonna leave it. Like 2 years made that big of a premium difference. Like,
you know what? That might be something I'll probably start offering to my clients to get their policy started. You know, to make sure that their home is covered and all that good stuff.
Yeah, dude. Like, we do mortgage protect. In the mortgage protection policies, baby, they take like a day, if that. It don't take long at all. Some of them are 10 minutes.
That's awesome. So I hope this was helpful for y'all. Thank you so much, Kayla. Hopefully we'll see you again, but I'm definitely going to be calling you. So
yes, baby, call me.
Just be looking for me.
So you know what we always end with, right?
Of course. I thought you wanted to talk to me just a little bit more. I didn't know you were trying to hang up, but that's cool. That's cool.
Oh, okay. We still talking, but we had 45 minutes. This is a good one.
This is a good one. You know, we missed. You know, we can go ahead and wrap. You know, we always have enough to talk about, so we can share on the next episode.
Yes.
So let's just make sure that we're always empowering each other,
embracing your true self,
and evolve on your journey.
Yay! Yay! That's what I be talking